In the last 2 years, China quietly moved $8 trillion. That's not a typo. $8 trillion. To put that in perspective, that's bigger than the entire economy of Japan. It's more than Germany's GDP. It's enough money to buy every single company in the S&P 500 twice over. And here's the thing that should keep you up at night. Nobody's talking about it. Not your financial advisor, not CNBC, not the politicians who claim they're watching China's every move. But I've spent the last 3 months digging through central bank reports, trade data, and corporate filings. And what I found isn't just concerning, it's a complete reshaping of the global financial system happening in real time. By the end of this video, you'll understand exactly what China's doing, why it matters to your money, and most importantly, what's coming next. Let's start with what actually happened. When I say China moved $8 trillion, I don't mean they withdrew it from one bank account and deposited it in another. This is something far more strategic, far more deliberate. Here's the breakdown, and pay close attention because each piece matters. First, US Treasury holdings. In 2013, China held $1.3 trillion in US government debt. They were America's bank, essentially financing American spending. Today, that number is under $800 billion. They have quietly sold off $500 billion worth of US debt over the past decade, with the selling accelerating dramatically in the last 24 months. Now you might think, so what? They're just selling some bonds. But here's what makes it significant. They're selling at the exact same time the US government needs to borrow more than ever. US debt just crossed $36 trillion and someone needs to buy those bonds. China is saying, not us anymore. Second, gold reserves. This is where it gets really interesting. China's official gold reserves have increased by 70% since 2019. But here's the secret. Those are just the official numbers. Independent commodity analysts estimate China might be holding 3 to 5 times more gold than they're reporting. They're buying from African mines, South American producers, even recycling old electronics for gold, and they're not announcing it. Why does this matter? Because gold is the ultimate hedge against the dollar. When you buy gold, you're essentially saying, I don't trust paper currency anymore. Third, and this is the big one, China has restructured over $6 trillion in trade relationships and corporate assets. Let me explain what this actually means. Chinese state-owned companies are pulling money out of Western stock markets, selling real estate in New York and London, divesting from European infrastructure projects. At the same time, they're redirecting that money into Asia, Africa, and Latin America through the Belt and Road Initiative. But here's the twist nobody's explaining. They're not just building roads and ports, they're creating an entirely parallel financial system. New payment networks, new trade agreements, new lending institutions, all operating outside the dollar system. Think about that for a second. For the past 80 years, if you wanted to do international business, you had to use dollars. You had to go through American banks. You had to play by American rules. China is building a system where none of that is necessary anymore. And they're not doing it loudly. There's no press conference, no grand announcement. They're just doing it quietly, systematically, with $8 trillion backing the move. Now, I know what you're thinking. China's been a rising power for decades. Why is this different? Fair question. Let me show you why this time actually is different. And I promise I'm not using that phrase lightly. The speed is unprecedented. Economic transitions usually take generations. The British pound didn't lose its reserve currency status overnight. It took 40 years after World War II. What China is doing, they're compressing that timeline into less than a decade. The scale is unprecedented. We've seen countries diversify reserves before. Russia did it. Saudi Arabia talks about it. But we've never seen $8 trillion move this fast. For context, the entire global foreign exchange market trades about $7.5 trillion per day. China has restructured more than a full day of global trading. The coordination is unprecedented. This isn't random market movements. In November 2023, China issued a directive. All state-owned enterprises must reduce exposure to Western markets by 2026. Not a suggestion, an order. That's hundreds of companies managing trillions in assets, all moving in the same direction at the same time. But here's what really makes this different, and this is crucial. China has alternatives ready. When Russia tried to move away from the dollar, the West sanctioned them and cut them off from the SWIFT payment system. Russia struggled because they didn't have a replacement ready. China learned from that. They've spent the last decade building CIPS, their own international payment system. In 2023, it processed over $170 trillion yuan. That's not a test system. That's a functioning alternative to SWIFT. They've signed currency swap agreements with 40-plus countries, meaning those countries can trade directly in yuan without touching dollars. Argentina, Brazil, Russia, Saudi Arabia, even France has a swap line with China. The digital yuan is already operational in over 25 cities, processing hundreds of billions in transactions. Other countries are testing it for international trade. So when I say this is different, I mean China isn't just complaining about the dollar system. They're not threatening to leave it. They're already building the exit. So what happens next? Let me walk you through 3 possible scenarios. Not predictions, not certainties, just scenarios based on what the data tells us. Scenario 1, the slow transition. This is the optimistic case. China continues gradually reducing dollar exposure over the next 5 to 10 years. More countries slowly adopt yuan for trade. The dollar remains important, but shares reserve currency status with the yuan and maybe the euro. In this scenario, you see gradual inflation in the US as demand for dollars decreases. Interest rates stay higher than we're used to. The stock market has more volatility but doesn't crash. American consumers pay more for imported goods, but the transition is manageable. The probability? Maybe 40%. This requires China to move slowly and the US to adapt quickly. Both are possible, but not guaranteed. Scenario 2, the forced separation. This is the medium risk scenario, and honestly, it's looking more likely by the day. Something triggers a crisis. Maybe a conflict over Taiwan, maybe a trade war escalation, maybe a financial accident nobody saw coming. In response, either the US sanctions China or China decides they're done waiting. The $800 billion in remaining Treasury holdings sold rapidly. Supply chains disrupted intentionally. CIPS fully activated as a dollar alternative. In this scenario, you see a severe market correction. Not a crash necessarily, but the S&P could drop 30-40%. Bond yields spike because suddenly there's less demand for US debt. Inflation jumps because imports cost more. The Fed faces an impossible choice: raise rates and kill the economy, or print money and devalue the dollar. This isn't doom and gloom, it's just reality. When $800 billion in Treasury holdings hit the market at once, prices drop. That's not speculation, that's math. The probability? Maybe 50%. We're already seeing tensions rise. The pieces are in place. It just needs a trigger. Scenario 3, the controlled demolition. This is the scenario that keeps financial analysts up at night, though I think it's the least likely. In this scenario, China decides they've accumulated enough leverage and deliberately triggers a financial crisis. They dump treasuries, restrict critical exports like rare earth elements and pharmaceuticals, and offer countries a deal: switch to the yuan system or face economic isolation. The result? A rapid dollar crisis, potential hyperinflation, market crash of 50% plus, and a complete restructuring of global finance. The dollar loses reserve status within months, not years. The probability? Maybe 10%. Why so low? Because it's extremely risky even for China. They'd hurt their own economy significantly. They'd unite the entire West against them. They'd risk military confrontation. And they can achieve their goals through Scenario 2 without the extreme risks of Scenario 3. But here's the thing about low probability, high impact events. They're exactly the ones you need to prepare for. Let me show you what's happening right now, not in theory, but in actual data. You can verify yourself. Central bank behavior. In 2023, central banks globally bought over 1,000 tons of gold, the highest in over 50 years. Who's buying the most? China, India, Singapore, Saudi Arabia. All countries either aligned with or hedging their bets on China's system. They're not buying gold because it pays interest. They're buying it because they're worried about dollar stability. Trade patterns. 5 years ago, about 80% of global trade was denominated in dollars. Today, it's closer to 58-60%. That's a massive shift in just 5 years. The UN's share has jumped from under 2% to almost 5% of global payments. Doesn't sound like much? That's a 150% increase. Corporate behavior. Major Chinese tech companies are delisting from US stock exchanges, not because of their failing, but voluntarily. Alibaba, Baidu, JD.com all either delisted or announced plans to. They're shifting primary listings to Hong Kong and Shanghai. Why? Because they've been told to reduce US exposure. Shipping data. Container ships from China to Asia, Africa, and Latin America are up 40% since 2019. Ships from China to the US and Europe, up only 5%. The trade flows are literally shifting on the ocean. Energy deals. Saudi Arabia, the country that invented the petrodollar, is now accepting yuan for oil sales to China. That's not a small thing. That's a fundamental crack in the system that's backed the dollar since 1974. I'm not cherry-picking data here. This is all publicly available, information from the IMF, World Bank, and central bank reports. The pattern is clear. The financial system is reorganizing, and it's reorganizing away from dollar dominance. All right, enough macro theory. Let's talk about what this actually means for your money, your investments, your future. If you're 100% invested in US stocks, You're exposed, not fatally, but significantly. In scenario 2, you could see substantial losses. That doesn't mean sell everything tomorrow. It means diversify intelligently. If you're heavily in bonds, especially long-term treasuries, you need to pay attention. If China dumps their holdings or even just stops buying new issues, bond prices drop and yields rise. If you're holding long-term bonds, you could see real losses. If you think your dollar savings are perfectly safe, they're safe from disappearing, but not from losing purchasing power. If the dollar's reserve status diminishes, inflation erodes your savings faster than interest rates can compensate. Here's what smart money is already doing, and I'm not talking about conspiracy theories. I'm talking about actual SEC filings and fund disclosures. Diversification beyond U.S. assets. Not abandoning the U.S., but adding exposure to Asian markets, commodities, and alternative currencies. Increasing gold allocation. Not going all in on gold, but moving from 0% to 5, 10, or 10% of portfolios. Shortening bond duration. Instead of 10 or 30-year bonds, holding shorter-term debt that's less sensitive to interest rate spikes. Adding commodity exposure. Things like energy, agriculture, industrial metals. Real assets that hold value regardless of which currency dominates. Building cash reserves. Muamros, not to hide under the mattress, but to have dry powder when opportunities emerge from volatility. Notice what I'm not saying? I'm not saying sell everything. I'm not saying the dollar is going to zero. I'm not saying buy gold coins and hide in a bunker. I'm saying the global financial system is shifting. The data shows it clearly, and maintaining the same portfolio allocation you had 5 years ago might not make sense anymore. The question everyone wants answered, when does this happen? The honest answer? Nobody knows exactly. Anyone who tells you they know the precise date is either lying or selling something. But we do have clues. China's 2026 deadline for state-owned enterprise divestment is real. That's documented. So we know significant restructuring completes by then. The U.S. election cycle matters. Major financial moves often happen during transition periods when policy is uncertain. Taiwan is the wild card. If tensions escalate significantly, it could accelerate everything. If they de-escalate, it buys time. My assessment, based purely on the data, we're in a 2 to 5 year window where significant changes are highly likely. Not certain, but likely. That means sometime between now and 2028, 2029, we'll see major shifts in how global finance operates. Could it happen sooner? Yes, if there's a triggering event. Could it take longer? Also, yes, if both sides decide gradual transition serves their interests better than confrontation. But here's what I'm confident about. This isn't a maybe situation anymore. The restructuring is happening. The only questions are speed and severity. Look, I started researching this topic expecting to find exaggeration, clickbait, typical financial fear-mongering. What I found instead was something much more nuanced and, frankly, more concerning. China isn't trying to destroy the West. They're trying to create options for themselves. They're tired of holding trillions in assets that could be frozen if political winds change. They're tired of every international transaction requiring dollar conversion. They're tired of American financial dominance. And here's the thing, you can't really blame them. If you were sitting on $3 trillion in reserves and watched Russia get cut off from SWIFT overnight, wouldn't you build alternatives too? The problem is, when you're talking about $8 trillion moving, when you're talking about the world's second largest economy restructuring its entire financial relationship with the West, there are consequences. Not because anyone's trying to hurt anyone, but because the system we've relied on for 80 years is changing. Is this a crisis? Not yet. Could it become one? Absolutely. Is it something you should pay attention to? Without question. The smart move isn't panic, it's preparation. It's understanding what's happening, why it's happening, and positioning yourself accordingly. Don't trust me blindly. Go verify this data yourself. Check the central bank reports, look at the trade statistics, follow the corporate filings, the information is public, the pattern is clear, and then make informed decisions about your own financial future, because that $8 trillion China is moving, it's not just their money. It's a restructuring of the entire global financial system, and whether you pay attention or not, it's going to affect you. The question is, will you see it coming, or will you be surprised when it arrives? If you found this valuable, subscribe, because I'll be following this story as it develops. No hype, no fear-mongering, just data and analysis. Until next time, stay informed, stay rational, and most importantly, stay prepared.